Hi, and welcome to another episode of the Michael Yardney podcast. Today we're going to talk about why median prices may not be the best gauge for housing costs. Now, if you're like most property investors or people interested in property, apart from auction results, median prices are probably the most commonly quoted statistic. But maybe they're not the right way for you to judge how our housing market's going. Maybe it's not the best benchmark, and my discussion today with leading demographer Simon Kuestenmacher may challenge some of your perspectives. Now, let me remind you that once a week I also run a separate podcast with Simon called Demographics Decoded, and every now and then I run one of those shows on this, the Michael Yardney podcast, just to give all the many new listeners a taste of the other show that I'd love you to subscribe to as well. And that's what this is. It's an older episode of Demographics Decoded, where we unpack why median prices may not be telling the full story when it comes to housing affordability and what alternative measures might provide a clearer, more accurate picture of the true costs of buying a home in Australia. So whether you're an investor, a home buyer, or just interested in the housing market, I think this episode is going to equip you with some insights that you need to better understand the realities of housing costs and the metrics that matter the most. So let's get on with the show with Simon Kuestenmacher.
Hello, this is the Demographics Decoded podcast with me, demographer Simon Kuestenmacher.
And me, Michael Yardney, property and wealth creation expert. And this is the podcast where we unveil the trends shaping our futures. In this episode, we're going to explore a thought-provoking article that was published in The Australian a while ago that Simon published called Why Median Prices is Not the Best Gauge for Housing Costs. It's a topic that couldn't be more relevant in today's complex and evolving property market where house price and affordability is in the news all the time. Look, if you tried to make sense of property prices and found yourself relying on median prices as a benchmark, I think my conversation with Simon today is going to challenge your perspective. We'll be unpacking why median prices may not be telling the full story when it comes to housing affordability. And I want to ask Simon what alternative measures might provide a clearer, more accurate picture of the true cost of buying a home. So whether you're an investor, a home buyer, or just interested in the housing market, and especially as a business person, I think this episode's going to equip you with the insights you need to better understand the realities of housing costs and the metrics that matter the most. Simon, after that long introduction, it's great being back together again.
It's great to be back on. Always enjoy our recordings.
Well, our weekly Demographics Decoded podcast is really getting traction with lots of subscribers. Simon, I think after the weekly auction results published every weekend in the media, median house prices are the most quoted property statistic, and they're used by the media to tell us whether our houses are going up or going down in value, as well as how affordable, or let's be blunt, unaffordable properties are. But Simon, in your article in The Australian, you questioned this. So maybe you could start by explaining what the median house price represents and why it's traditionally been used as a benchmark.
Yeah, so the median house price measure is pretty simple. You look at all the houses that were sold, and that's, of course, if you look at a city or a country that is an awful lot of houses, and you list them by price. And the one in the middle is the median. It just says the middle price. It's not the average where you calculate the total number of sales divided by the total sales price by the total sales volume. That's not what you do here.
But that's average, of course, isn't it?
Yeah, that's average. And so the most common, the middle house, that's the median price. That is a very, very smart and generally interesting measure if you happen to live in a country where the wealth distribution, where society roughly resembles a bell curve. A bell curve, of course, is essentially half an egg, looks like a bell, so to speak, where the vast majority of people lives in a middle income scenario. Yes, a couple of poor people exist. Yes, a couple of rich people exist, but mostly we are a middle class society. That is long gone in Australia and in most Western developed economies, to be honest. By now, more and more economies do resemble a letter U, where there is more and more low-income earners, more and more high-income earners, and the middle class has actually been eroding over the last couple of years, and it is increasingly the smallest sector of society. So in this letter U shape, the median measurement, the price that is exactly in the middle, is not the most common type of property, but it is the least common type of property. And so, yes, whether you add a couple of more super rich people, a couple more super poor people, then the thing moves a bit. But it is surprisingly price stable, and it is not a real life measure anymore. Because in this bell curve environment where everyone is roughly the same, the median house is what you tend to end up living in, more or less. So it's relevant. But in this U-shaped scenario, the poor people, they can never ever even dream of living in a median house. That makes no sense. And the rich people, they wouldn't be seen dead in a median house, which is much below their standards. So this measure is precisely interesting for no one. So that's not what you want. You'd rather then want to be a bit more specific with those measures and go, okay, so show me my suburb. And this particular suburb, of course, because we segregate based along socioeconomic lines, that is much more interesting. So you take the median house price, not for all houses or all properties, but just for a 3-bedroom stock standard family sized home in this particular suburb. And all of a sudden the median measure becomes much more useful. But so when I hear about what the median price of Melbourne does, a city of 5.5 million people, I don't care. To be honest, that is too vague. It is not a real life measure. It's a nice quick proxy to say, as a media grab, this thing goes up, this goes down. I understand it. And it is somewhat interesting, but it's too vague to be quite fair.
Well, one of the reasons they don't use average prices is because a few extremely expensive properties or very low properties can distort the average. But interestingly, even over winter, when in general more expensive properties don't sell because everyone was away on holidays overseas in the cold Melbourne winter recently, even the median can be affected to a degree. And in the suburb, I agree with you. You can't look at the median for Melbourne, Sydney, Brisbane, but that's what the media reports. And you should be looking at a more granular suburb level. But some suburbs are more useful for median prices. In other words, where all the houses are similar, like in the outer suburbs. In the suburb I live in Brighton, in Victoria, if you live on this side of the beach road, there's all what they call the Golden Mile. You just cross the road and you've still got very, very expensive houses, but they're nowhere near as expensive because they don't have views of the beach. Go in a bit further to this beautiful suburb of Brighton and you've got some quite older houses, but they're often single-fronted rather than double-fronted. So even in a suburb, median prices, where there's a wide variety of properties, isn't a very accurate measure.
Exactly. And so every now and then you go to a greenfield suburb on the outskirts of town where you just bulldoze a bit of land and all you slap on are 3 and 4 bedroom, relatively cheap family homes. Then the median price movements are extremely precise and a very good measure. But of course, yeah, if you have as you described in Brighton, you have a suburb with different localities that have different logics, then you want to look at smaller pockets. And this is where, of course, property investing or property purchasing for a family home becomes much more of a detailed task than just to look at one simplistic measure that roughly tells you how this moved or developed. And then, of course, you have all those boring things in terms of what's the actual quality of the road, of the street look like? What are there future developments coming your way that might drive up or down prices? So it becomes much more detailed. And there are, of course, plenty of companies, such as your business, that helps you with these kind of decisions when you make, housing choices. But, I always look at this from the biggest, most zoomed out macro perspective. And so I'm not too fussed about suburb levels because I'm more interested in measures that tell me the future broad direction of society.
Well, we're going to get into that, but let's just go back to a point you made a moment ago, that Australia is no longer a middle-class society. We tend to think we are, but there's rich folk and poor folk and fewer in the middle, as you said. I know that I learned from you a number of years ago about the 5 different job skill levels and how they are very different and they affect how much your income is going to be. And I guess over the long term, then where you can end up buying your own properties.
Exactly. So The ABS, our friends at the ABS, they measure jobs. So in the census, and Australia runs a census every 5 years. And one of those questions is, hey, what's your job? And whatever you answer, the ABS manages to fit into one of 1,300 categories. That's the number of jobs that officially exist in this country. And every single one of those jobs has a skill level attached to it. It's a number from 1 to 5 that indicates how much formal training is required for you to do the job. Skill level 1 jobs, they need a uni degree. Doctors, engineers, for example. In skill level 2 jobs, they need a bucket load of training, but just not a uni degree. So these are police officers or firefighters, for example. And skill level 3 jobs, we tend to call them the middle skilled jobs. They are the backbone of the Australian middle class. You tend to need a technical qualification, a TAFE level education, to get into those jobs. Our trades, our plumbers, our electricians, quite a few highly skilled manufacturing jobs as well are in this middle skilled sector. Skill level 4 jobs are called low skilled jobs. So you need some sort of formal training, maybe a forklift license to work in a warehouse. And skill level 5 jobs are technically called unskilled jobs. No formal training needed. All you need to know for the job, you shall be taught on the job. And the kicker here is that the more highly educated you are, the more money you make. It's just that simple, statistically speaking, in Australia. What confuses people every now and then is that they all know of a plumber that takes home $300,000 per year, but they do forget that the plumber is cheating because he's not actually a plumber. He is a small business. He operates, he has a back office staff member. He has another plumber or an apprentice, and he takes cash. So that's how he gets to $300,000 per year. That said, that plumber became so rich because they are in high demand. The skill level logic is that back in the day, we would have expected, and in the 60s it was the case, that skill level 3 jobs are the most common type of jobs. That's the type of job that you usually have the most of if you are a manufacturing country. If you moved your society from agricultural, we call primary industries, to secondary industries, which is manufacturing, the industrialized phase of economic development. We have heaps of them. But now we are quite quickly transitioning away from this manufacturing-based economy into a knowledge-based economy, into a highly skilled laptop-based economy, so to speak, where you need all those office workers. And in that scenario, we just eroded those skill level 3 jobs. We made quite a few political decisions in Australia to further de-incentivize people going into middle class skill level 3 jobs. So we put a pay hurdle in front of a TAFE degree, in front of those technical degrees. So some people, for them, the hurdle was too big. So they stayed in skill level 4 and 5 jobs. And some people looked at this hurdle and went like, well, screw this. If there's a pay hurdle, I might as well go to university because the pay premium that my degree gives me, the uni degree, is much higher. And so we overeducated our society. We have too many university graduates, and we have too few people in middle skilled Australia, in the tradie type jobs, which now creates a scenario where, weirdly enough, quite a few of those skill level 3 tradies are actually earning quite decent money, and even out earn quite a few of those skill level 1 workers. So that throws the simple logic a bit away, that education is king. But we're now correcting this. We're making TAFE free again. So that ultimately will push more people into those skill level 3 jobs, which will not be a good news story for the existing plumbers and electricians, because they'll have more competition, and that should create negative wage pressure.
Well, that's all fascinating, but what does it mean, going back to our initial discussion regarding median house prices, Simon?
What this means is that if we have fewer people in the middle, just the market demands that there is more demand at the absolute top end of the market, and that there's more demand at the absolute bottom end of the market. Whereas the median house, which builder builds the median house? And we always need to remember that the development, housing development, construction, is a low margin industry. Essentially, those builders, they build whatever you ask them to, and then they slap a profit margin, usually 25%, well, if they're lucky, on top of that. And that's their business model. It's just that simple. And so the demand goes, more and more people want housing at the top. So it's much more attractive to charge 25% on top of a house that costs $500,000 to build rather than to slap it on top of the house that costs $200,000 to build. So everyone gravitates towards the top end of the market, the flight to quality, as it is called. We abandon the bottom and the middle. We also kind of abandon the middle because we have this massive shortage of tradies because we kept eroding the middle class away. So the housing market now finds itself in a situation where we cannot provide enough housing. And then we add more and more housing stock at the top end of the market, which technically speaking drives up the median house price, but we only build housing at the top end of the market. We're not helping the bottom end of the market.
I just want to interrupt this show for a moment to remind you that while you're listening to this particular episode on the Michael Yardney podcast feed, this show really is an episode of my new Demographics Decoded podcast that I deliver each week with Simon Kuestenmacher. And boy, has that show gained traction, ranking amongst the top business and investing podcasts in Australia. So even though you received it on the Michael Yardney podcast feed, please take a second to stop the show now and search for Demographics Decoded and subscribe on the same podcast app you're listening to the show now or on YouTube, because we also have a video of each show. Now, to make life easy, I'll be including links in the show notes. And I just wanted to again remind you that I'm only running occasional episodes of Demographics Decoded here, so you get to understand the type of things Simon and I are talking about. And I look forward to sharing 2 shows with you each week, the Michael Yardney podcast, twice a week, Tuesdays and Thursdays, which we spend time talking about property, success, money and wealth, and every Wednesday, Demographics Decoded, where Simon Kuestenmacher and I unveil the trends shaping your future. So there's a lot of news at the moment about housing affordability, or I guess unaffordability. What's the difference between housing affordability and house prices? How do you distinguish the two? What do you think about that?
So house price is just the dollar value of your house. And is that house expensive or not? Who knows? It's just a number. And of course, there is inflation throughout years. So when somebody tells you that they bought a house for $20,000 in the 60s, you don't even know if that's a lot or not. And the best way of measuring this is to compare the price of a house, the median price of a house, we tend to do, with the median income. And so we then get the income multiple. So we can say, hey, instead of saying this house costs $1 million, we can say this house costs 10 times the median income. That is much more interesting. And we then see that in, the 60s and so forth in Australia, a median house cost around 4 times the median annual income. And now we are in Sydney up to 14 times the median income, in Melbourne about 10 or 11 times the median income, annual income. So the exact numbers here don't matter. We just know that it has gotten much more expensive to own a house. And of course, if a house costs more income multiples, you do need much more time to save up the down payment. So we tend to roughly estimate that in order to get a mortgage from a bank, you need to have 20% of the house price in cash to throw at the bank as a, safety deposit for them. So for $1 million house, if you want to buy one of those, you need to have $200,000 lying around. And that, of course, is much harder than getting 20% of a house that costs $100,000 back in the day. If that makes sense. So it takes longer to save for the house, then you also need longer to pay down the mortgage.
So the measurement of incomes to price ratio has changed, and therefore, as you correctly say, it costs more. But there's another argument that people are currently saying, and that is, well, that doesn't allow first home buyers to get in the market. In my mind, that's a slightly different argument, because first home buyers shouldn't be expecting to buy a median price house when they start off, even though many of them want to own the sort of house that took their parents 20, 30, 40 years to be able to afford. I know when I started off, my first wife and I had a small apartment. Boy, I actually did have a couple of investment properties at that time, which I sold even just to be able to do that. So there's one measurement that we're talking about, that yes, house prices have become more expensive. The other is first home buyers getting in the market. I'd like to discuss both of those with you. House prices getting more expensive. We're building big houses, Simon. When I grew up, My parents had a small front yard, a bigger backyard. There was an outside bathroom toilet who had the 2 bedrooms and a little lounge room. Today, everyone's got to have their own bedroom with an ensuite and a media room. Maybe the lot size isn't as big, but we're building massive houses in Australia compared to the rest of the world.
Yes. And so historically speaking, in Australia, when baby boomers really changed housing forever in this country, they bought quarter-acre lots. So there was relatively big land, 1,000 square meters or thereabouts, and the land was dirt cheap. So the land was not the most important factor in the house price. So you then rather saved or made the house more affordable by building a smaller house. And then as families got richer, they extended the house because they still had land to do this. And nowadays, land is the most expensive element of a house purchase. So in order to cope with that, what we've done is we don't sell quarter-acre blocks now. We sell half of that or even a quarter of that. As we build our houses on much smaller lots. But because the expectations changed, back in the day, there was a dunny in the garden. There was just a separate loo in the garden rather than in the house. So that's not a thing anymore. Now a 3-bedroom house definitely needs 2 bathrooms. So all of a sudden that makes sure that the house needs to grow. We also changed the kind of preferences that we have in regards to housing. Growing up, in the past, it was quite common for siblings to share a bedroom for at least a prolonged period of time. That is increasingly what people avoid if they can, financially speaking, because they have a simple formula: 1 bedroom for mom and dad, 1 bedroom for each kid. So if you have 2 kids, you already need 3 bedrooms. And if you are a knowledge worker, meaning you work from home quite a bit, then you also need a study, a home office. So then you end up with the need of a 4-bedroom house. And that is expensive. So, well, you just need more space because you took a couple of the functions that you did outside of the home in the past, work, you take this into the home, then you say, well, we need more room for our kids. That grows the home, so that the need for a house just became bigger, and we're now dealing with this.
You brought back some memories as we discussed that, because apart from the toilet out the back, we also had an incinerator. It was my father's hobby to actually burn all the things in the backyard. But then you also had a Hills hoist because you didn't have clothes dryers. So he wasn't allowed to put the incinerator on at the same time my mother put the washing out in the backyard.
Exactly. And that's another thing. So you had a function drying clothing that happened outside. And now drying clothing happens inside.
The laundry used to be out the back too, Simon.
Exactly. So we changed the physical setup of the homes because we adjust based on technology, based on time. By now, most households operate on 2 income earners. So that means we need to invest heavily into what we call labor-saving devices, vacuum cleaners, washing machines. All those things actually make managing a household much faster. Think about it back in the day when you swept the house rather than vacuumed. When you had this was called a laundry day, not because once a week you did laundry, but because once a week you did laundry for the whole day. That's what a laundry day was. And now laundry is, it's so annoying because I need to take the load of washing from the washing machine into the dryer. That took a whole day back in the day. Yeah. And so we adjust based on our reality, based on our physical setup, based on the technology available to us. Yeah. And we spend much less time cooking. Because we have faster ways of providing food. Is that better for our health? Probably not. But we adjust as society to those changes.
Now, I just want to remind people who are listening to this, while this is not a property podcast, we're currently talking a bit about property, and everyone lives in a home or rents a home, wants to upgrade their home. So I hope this is giving you some insights. And if you're getting benefit from this and you don't currently subscribe to this show, because it's a relatively new show, please excuse me for reminding you that to just stop for a second and on whatever podcast player you're listening to this, subscribe or follow this show, or if it's YouTube, please do that as well. And do us a favor, if you're getting benefit from this, just like you probably learned about this from somebody, tell somebody else about it, especially if you're enjoying it. And if you're not enjoying it, tell them why should you be the only one who's not having fun too. So help us spread the word, because our aim with this podcast is to help people understand what's ahead for their future. Today, Simon, we haven't really spoken as much about the future as about what's currently happening, but I think what we have pointed out is the various skill levels and how Australia isn't the middle-class country we were expecting before. Many of us thought it was before. So if we just want to round things out a little bit, what's going to go ahead for housing affordability? Because currently it seems that there's no easy answer in sight, because governments are not prepared to lower the price of established properties. On the other hand, they're really very keen to tax new properties being built. So what's going to make properties more affordable and make the median price to household income more accessible?
So my outrageous long-term forecast is that housing will become more affordable, meaning we will lower the income to house price ratio. When exactly this shall occur is a difficult question, but just politically speaking, we could make housing cheaper. We know that if we were to get rid of franking credits, first home buyer grants, stamp duties, quite a few taxes on developers, we know that we could drive down house prices right now. So it's politically possible, but it's not very advisable to politicians, because if you were a political party that said, hey, I make housing cheaper, then the other party would be very happy because they wouldn't need to do anything. They just sit still. And then the majority of Australians, still 2/3 of Australians, live in a house that they own. They would not vote that party in. So as long as there is not bipartisan support before a policy gets even announced or suggested, we will not touch this thing. That's for now. What will happen in the long run is that we will minimize the number of Australians, or the share of Australians that live in a house that they own, because we'll now see the big cohort of baby boomers that owned a house over the next 10, 20 years, they start dying. That then takes homeowners away from the statistics, all the while the young folks that enter their housing journey on the other end of the market, they are increasingly more likely to rent. So we increase the share of renters. And so therefore renters become a more politically dominant party. And because the share of votes, politically speaking, that goes to our big two parties, Liberal and Labour, that keeps shrinking. So the third parties get bigger. All of a sudden, those third parties, and overwhelmingly the Greens, that are the party of the renters at the moment, they have much more political bargaining power. So all of a sudden, those political impossibilities of making housing cheaper become much more palatable in about 10 years or so. And all the while, of course, while baby boomers start dying in 10, 15 years, that pushes their property on the market, which again increases supply, and that also should have a softening effect on house price market. So I do think and of course, increasingly we will find more policies to push more supply on the market. It's not like even though it's easy to be cynical and say politicians, they don't do anything. Whenever you go to Canberra, whenever you talk to the big movers and shakers in this country, they are all trying to add more supply to the market, and we'll find ways eventually. So that I would say in about 10 years time, the income to household ratio in Australia will lower rather than increase.
Now, you mentioned a moment ago about speaking to politicians. I know part of your role as a demographer is to advise businesses, business organisations, state governments and government organisations. And so therefore, if you're watching this or listening to this and you believe that Simon would be able to give you or your organisation or your business more advice, I'm going to leave a link in the show notes to have a chat with Fiona at the Demographics Group. And why not invite Simon to give a presentation to you or get some benefit from the research the Demographics Group does, because as you can see, there's a lot of powerful research there. Now, Simon, I see, just following on what you were saying, there's two sorts of housing market. There's the established homes where currently, as you say, close to 70% of Australians own a home or are paying it off. And the government doesn't want to, they're not going to lower the value of established homes. It would ruin the banking system, the economic system. The property market's too big to fail. Having said that, though, there's all the new homes that we're going to have to build for the people coming into Australia and also for people now moving out into household formation age. And that is very, very heavily taxed at the moment. And I'm not just talking about stamp duty when they eventually purchase the property, but all the taxes along the way. So there definitely is the ability for government to lower the cost of new entry-level accommodation, isn't there?
Exactly. And if you look at, there's always taxation tools that you can utilize. So, and Queensland, I think, is doing this now, that you just get rid of stamp duty. You just say, I'm not collecting it for first home buyers if they buy a new development, and these kind of things. So you have those rules that you can theoretically play with. They will increasingly do this because, politically speaking, it is so much easier to add supply, because that means you're giving people something. And so you then find all those ways to encourage new development, new builds. And that's an easy political thing. You can easily have bipartisan support for this. So I think in Australia, we tend to go down the easy route whenever it's available. And we will be doing that in housing policy.
Well, again, thank you for our weekly chat. I enjoyed talking, especially because it was about property, but it also was just interesting understanding about how demographics are driving this. Now, next week, Simon, I'd like to actually talk to you about our changing employment landscape, and I'm going to ask the question, is your job really safe? So next week's episode is going to be very powerful for anyone who's currently still in the workforce or who has children in the workforce. So if you don't currently subscribe to Demographics Decoded on your favorite podcast app or on YouTube, please just take a second to do that. And I look forward to catching up with you again in a week's time, Simon.
It'll be a very fun topic to discuss.
This Demographics Decoded podcast was brought to you by Metropole Property Strategists. We provide a complete range of services to help our clients safely create intergenerational wealth through strategic property and wealth advice. If you're looking to buy an investment property or your next home, why not have a discovery chat with one of our wealth strategists? Go to metropole.com.au and explore your options. You'll find we're much more than just another buyer's agent. We provide a complete range of services, including property and wealth advisory, home buying, buyer's agency, property management, renovations, and development management services. The team will help you with frameworks that I've fine-tuned over 5 decades and we've been helping clients with for over 25 years. We're big enough to tip the scales in your favour, but still small enough to care. You can follow me on social media, but I suggest you also follow Simon Kuestenmacher. You'll find him regularly posting on all the social media platforms. I'll include links in the show notes. And thanks for spending the last little while with Simon and me. I hope you got some benefit from the show. And if you did, and you know somebody else who'd also benefit, please tell them about the Demographics Decoded podcast. There's a share button on every podcast app. You'll be doing them a favour. I hope you will anyway, and you're definitely going to be doing us a favour, helping us in our quest to make as many people as possible aware of the demographic changes that are going to shape their future. And of course, any of the discussion we had today was not personal advice about your future, but just general information to help inform you. Thanks for spending the last little while with me. I hope you got some benefit from today's show. But before you move on to the next podcast that you're hoping to listen to, please let me remind you that what you just heard was an episode of another show that I produce once a week with leading demographer Simon Kuestenmacher. We call that show Demographics Decoded, and there we unveil the trends that are going to shape your future. Now, I replay occasional shows on this channel, the Michael Yardney podcast, to make you aware of the other show. But Demographics Decoded is a must-listen-to podcast. It's for anyone who's interested in property investment, business and entrepreneurship. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your favourite podcast app or on YouTube, wherever you're listening to this right now. Now, if you did enjoy today's show, the episode of the Michael Yardney podcast, tell somebody else who you think would also benefit from my podcast. Actually, tell them about Demographics Decoded as well. Remember, there's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons at the top of the player. Or just talk to your friends in the old-fashioned way. Tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour. You're definitely going to be doing me a favour in helping in my quest to make as many people as possible financially literate. By the way, you can catch up with me in between these shows on social media, or you can join my private Facebook. Just go to Facebook and look for the Property Update Facebook group. Hey, I've got a special bonus for you too. It's my way of saying thank you for subscribing to this podcast. Just go to podcastbonus.com.au. I'll leave a link in the show notes, podcastbonus.com.au, where we've got a bunch of ebooks and special reports. That's my way of saying thank you for taking the time to listen. Oh, by the way, if you haven't listened to the many, many podcast episodes we've already recorded, you can always listen to the old episodes where each one has lessons about property investment, success, and money. Once again, thanks for listening to today's show.